Nigeria's foreign reserves rise by $294.99 million in 1 month. Africa Free Trade Pact takes off as Federal Inland Revenue Service moves to ease audit experience for taxpayers. Nigerian Stock Exchange launching sustainability report to promote environment, social and governance reporting. And stocks tumble amid intensifying fears about global growth. This is Business Express coming to you from our Abuja studios, and I am Muplang Dakok. Nigeria's foreign reserves rose by $295 million to $45.087 billion as of May 27, 2019. Latest statistics from the Central Bank of Nigeria reveals that the reserves have maintained a steady rise from December 2018. Governor of the Central Bank, Godwin Emefiele, has maintained that the introduction of the investors and exporters window, along with improvement in domestic production of goods, helped shore up the country's external reserves. Nigeria's current stock of external reserves is now able to finance over 9 months of current import commitments. The dream of having African Free Trade Area is now a reality with the takeoff of the process this Thursday. The African Union hopes that the initiative will be a continental market of 1.2 billion people worth $2.5 billion. The agreement's operational phase is to be launched on July 7th at AU Summit in the Republic of Niger. 52 of the EU's 55 member states signed the agreement to establish the free trade area since March 2018, and economists are of the view that Africa is largely ignored in the US-China trade war that could rock the world economy, which could affect the free trade area initiative. Economic experts at the 5th edition of the Red Lecture are advocating human capital development and adequate attention to growing micro, small and medium enterprises as solutions to real sector constraints. They believe this will fast-track the economic diversification drive in the next 4 years. The report. The World Bank, in its 2018 Human Capital Index, ranks Nigeria 152 out of 157, and experts say this is not reflective of the potentials of the country, considering its vast human resources, as evident by Nigerians excelling in various fields around the world. To solve the problem, experts at this edition of the Red Lecture recommend increased support for innovation and investment in skill-specific micro, small and medium enterprises, especially among youths.
We need to be able to raise our level of productivity. To be globally competitive, we have to produce as efficiently and effectively as the competitors in Europe, in America.
Help use the structures on ground already, which is the commercial microfinance banks, due to their branch networks, to help reach the people, which are the MSME segment, who, in my view, remain the engine of economic growth in any economy. So the government, the federal government, has done an admirable job, but there's a lot more that needs to be done.
They say human capital development can be achieved with good quality leadership that prepares the ground for inclusive growth for all. Business Express will today look at efforts to step up revenue collection in the country and initiatives in the last 4 years as we begin the second tenure of President Muhammadu Buhari. We'll return after this break. Good to know you're still there. I had earlier discussed with Babatunde Fowler, Chairman of the Federal Inland Revenue Service, on ranging issues concerning initiatives by government to boost revenue collection and sanitize the process of tax administration in the country. We now bring you that discussion so you can see what the chairman of the FIRS said about Nigeria's tax collection in the past 4 years of Buhari administration. Babatunde Fowler, Chairman of the Federal Inland Revenue Service, joins us to look at initiatives by government to boost revenue collection and sanitize the process of tax administration in the country. You're welcome to the program.
Thank you for having me.
Okay. Can you tell us how far, so far, that the federal government or through the Federal Inland Revenue Service, what has it achieved in tax collection?
Well, let me first of all start based on what you said, simplifying tax administration and tax audit.
Okay.
We're a member of the Joint Tax Board, of which I'm also the chairman, but also has the other 36 states internal revenue services. We signed an MOU, so if you're operating in more than one tax jurisdiction, for example, if you have business in Lagos and you have business in Kano, instead of you being paid 3 visits, one by the FIRS, one by the Kano State Internal Revenue Service, another by the Lagos State Internal Revenue Service, then basically you can have a joint audit and we'll come together as members of the Joint Tax Board, audit your accounts and make sure that every state where you operate is gets whatever is due to them, and you finish your audits within 63 days.
I'm sure taxpayers will be very happy.
Yes, although it's left to them to decide whether they want it. A few taxpayers have gone for the joint audit, and I believe it's working very well, and we believe it will reduce the cost of the tax audit exercise, will save time, and allow the businesses to continue to work without any disturbance.
Okay.
Now, in terms of what we have done, we've just finished the first quarter. Our main period for tax collection by the FIRS is from the months of June or July, basically because most companies that have their year end as December 31st have about 6 months in the new year to file their returns and start making their tax payments. However, in the first quarter, we're able to achieve a little over 1 trillion. That figure was down in the oil sector by about 28%, but in the non-oil sector, it showed an increase of about 5%. So we're hopeful that as we continue to move forward, the non-oil sector will continue to improve. And of course, as they improve, we continue to collect more taxes.
Okay. So, but tell us in terms of numbers, what you have been able to achieve, say, in the last 4 years.
Well, in terms of numbers, we talk about widening the tax net. From 10 million people and corporate organizations on the Joint Tax Board, we moved to 20 million last year. We expect to move to about 45 million before the middle of this year. That will certainly widen the tax net, and of course it will bring in more taxpayers and of course increase revenue. We've also been able to make the ease of tax payments very convenient and accountable for all taxpayers. In terms of the World Bank ranking in the ease of payment of taxes, over the last 2 years, we've moved positively 25 places. In 2018, we moved 14 places, and 2017, 11 places, meaning that our ranking as a country has improved.
Yes.
We've also deployed technology. So basically, you can carry out all your tax activities without knocking on a door, without seeing a tax official. From the point of registering a new company, you can pay your taxes online. You get your tax ID also online. And anytime you make a payment, you get an alert. As long as you've given us your email address or your phone number, you get an alert and you can download your receipts online, confirm your receipts online. So basically, you can perform all your duties for Nigeria anywhere in the world 24/7.
Okay. So is there any provision for those who are not ICT compliant from what you talked about now, that people go online to?
Well, it's very simple, and we've also deployed computers to most of our stations. So if you walk in and you ask them to show you on computers, we have dedicated computers and staff who can show you the process, of course free of charge, and show you how simple it is. And of course, we now have what we call the consolidated tax database, meaning that for all taxpayers in Nigeria, we are training staff from various states, and they'll be given access to this. So if you reside in Kano and you want to carry out business in Lagos, instead of the head of the Lagos Internal Revenue Service contacting his colleague in Kano, at the touch of a button, he will see your tax status.
Okay. All right. The federal government has done quite a lot to improve the ease of doing business in Nigeria. So how has the ease of doing business impacted or affected the tax process?
Well, we believe that as Nigeria becomes more attractive through the ease of doing business, it will have the opportunity to bring in more foreign direct investment.
Okay.
And even for Nigerians who sometimes think that it's difficult to do business within Nigeria, they'll be encouraged to do business within Nigeria. If we look at some of the executive orders, for example, you want to get an approval. It says that if you do not get a response within 2 weeks, then you're expected to write to the minister. And if you still don't get a response, you can assume it's approved. And also, basically, if you are working in one government agency, you should not send that investor or the businessman to another government agency to get information that you can also get from different government agencies. So certainly, the government has shown its desire to improve the environment for business. And of course, with business, employment comes into play, and with employment, tax revenue increases.
Okay. This assets declaration has been on for some time now. How has it helped in collection of revenue for the FIRS and the country?
Well, it certainly has helped in that more people came into the tax net. In absolute terms, at the federal level, we had a little over 5,000 businesses come through that scheme, and they declared about 92 billion naira, out of which about 66 billion has been paid so far, and the balance will be paid instrumentally. And I think one issue that Nigerians had is that a few of them thought they were carrying the burden of many that others were not paying, or maybe those rich or those in high places were not paying taxes. But with this process, I think all Nigerians now know that regardless of your class or your income levels, you will be asked to pay your taxes. And I think that encourages others to equally pay their taxes.
Okay. So Nigeria has been quite low in terms of tax to GDP ratio. So would you say it's a problem of collection or a problem of generation?
Well, I think I would call it more of a problem of generation. In the mid-70s, when we found oil in commercial quantities under the military, at that point in time, Nigeria had more than enough money to fund its immediate goals. And so people didn't focus on tax. The tax revenue agencies were just part of governments that were little on, or maybe not even functioning. When the oil price dropped in 2008 initially, before this last drop in oil price, then a few states started to see the importance of looking inward, and of course Lagos State started that process. And I think right now, including the federal governments and all state governments and individuals, can see the benefits of paying taxes directly within their state and at the federal government level.
Okay. Can you speak briefly on the prospects for tax collection or revenue generation as a whole in the country, say this year, 2019?
Well, we have a budget of about 8.9 trillion at the federal level. Even if we do increase our collection, it's shared between the federal, state, and local governments. And for new governors who are coming in, they've made promises to their people or to their residents. And of course, to back up this promise, you need money, you need revenue. Like I say, you can have the best leader with the best vision, but without revenue, it remains a dream. So I think as we work together, Nigerians will continue to see the benefit of the payment of taxes, regardless of how small. And I think collectively, the FRS, with state governments and other stakeholders, will be able to make Nigeria the Nigeria of our dreams.
Okay. How are the states faring? Can we know how they are doing?
The states are doing quite well. If you look at their collection, the increase of their total revenue, they showed an increase of over 30%. They crossed the 1 trillion mark collectively. Although Lagos State still collects, I think, close to about 47 or 48% of the total collected by various states. But other states are picking up. And I can safely say that at least 3 or 4 states can survive without federal allocation now.
Okay. So, in closing, what do you see happening in the next 4 years in terms of revenue generation?
Well, in terms of revenue generation, I certainly believe within the next 2 years, if we continue along this line, that Nigeria will be able to fund its budgets without oil revenue.
Okay. So we've been speaking with Mr. Tunde Fowler, the chairman of the Federal Inland Revenue Service. Thank you very much for coming on the program today.
Thank you for having me.
Okay. That was our discussion with Babatunde Fowler, chairman of the Federal Inland Revenue Service, on revenue generation. Moving on, U.S. stock futures and global stocks, including shares of Asian and European automakers, tumbled Friday after President Donald Trump said the United States will impose a 5% tariff on all Mexican imports. Bosede Abel has a summary.
Stocks on the global market pointed to a decline at Friday's open after President Donald Trump of the United States on Thursday afternoon announced that fresh tariffs would hit on all Mexican goods starting from June 10. European stocks opened lower due to the pronouncement made by President Trump. Stocks in Asia were mixed as China's manufacturing data fell below analysts' expectations. Also, stateside investors will be monitoring the fallout from the announcement of the tariffs, which President Trump said could increase to 25% by October 1. This year, if Mexico doesn't stem the flow of undocumented migrants to the U.S. Nikkei slipped 1.63%, Shanghai Composite 0.24%, and the Hang Seng Index also dropped 0.79%. U.S. stock indices were sharply lower as investors feared President Donald Trump's threat of tariffs aggravated the risk of recession. In early trading, Dow futures indicated a negative open of more than 225 points. Futures on the S&P and Nasdaq were also seen both lower. In Africa, stocks were mixed. Tunisia's Tunidex, Ghana's GSA Composite and Namibia Overall Index started trade on a positive note, while South Africa's JSA Africa Top 40 and Nairobi All Share were red.
And back home in Nigeria, the NSE All Share Index closed the last trading day of the week, 31st May 2018, on a bearish note. It depreciated by minus 0.59% to close at 31,069.37 basis points. 212.9 million shares worth 2.7 billion naira exchanged hands at the end of the session. UBA was the most sought after stocks. Cement Company of Nigeria led the gainers table, while Nestle topped the decliners. And the federal government is encouraging South African government to invest in Nigeria's gas sector, which is currently worth $50 billion or 18 trillion naira. This was at the Nigeria-South Africa Chamber of Commerce meeting. Director, Department of Petroleum Resources, DPR Ladan Mordecai, said the action was ignited by the conviction that there is prospect for gas in Nigeria beyond its shores. He noted that such investment prospects abound in the development of upstream gas fields with a total of 37.4 trillion cubic feet Trans-Nigeria Gas Pipeline project. And still talking commodities, gold prices jumped in futures trade on Friday, supported by strong demand on jewelers at spot markets and firm global cues. On the other hand, crude oil prices were under pressure as the commodity fell in global markets and were on track for their biggest monthly fall since November. Let's see a graphic representation of commodity prices. The naira exchanged at an average of 361 naira to a dollar at the Bureau de Change segment of the market. We now take a trip to the foreign exchange market to take a look at the numbers. And that brings us to the end of this edition of Business Express. You can access all previous episodes on YouTube, and you can also communicate with us on Twitter, and the handle is @NTA News Now. The hashtag is BizX. We value your feedback, and so keep the mails coming and join us again next week. I am Muplang Dakok.